Hi there, this is routine weekly traffic light update for the week ended on February 24th. Prior to going into the detail of the presentation, here are the disclaimer. Traffic light and capital appreciation point are the results of proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here's a typical agenda. We'll review the latest traffic lights on long-term indicator S&P 500, intermediate indicators Dow Jones and NASDAQ Composite. We'll be looking for bearish and bullish trades. Traffic light S&P 500 is the long-term indicator. Here's the overview at the end of February 24th. It is the second time in history that traffic light reached the bottom. The last time it reached the bottom was about 1995, prior to a long bullish run. Let's go over the legends. X-axis is the time. The oldest period is on the left. The latest period is on the right. Y-axis is the daily close of S&P 500. The blue line represents the daily close of S&P 500. Green line is the proprietary line, traffic light S&P 500. The horizontal purple and the red line apply to the green line, traffic light S&P 500. The red line is a long-term conservative line. When the green line crosses above the red line successfully, it is better to take a long-term conservative positions. The purple line is a long-term position indicator. When the green line crosses above and crosses back down, it is less risky to take a large bullish position. Traffic light S&P 500 show less long-term risk because the light has been descending to the green, as shown here. Monitoring still required. In 2000, the breach of the red line takes several tries. Traffic light Dow and NASDAQ should also reveal whether the crossing of the red line is genuine. From the November 18, 2016 announcement, we compare the current situation to that of mid-2012. In the 2012 time period, as the index attempted to make a new high, there were pullbacks, and each pullback is less severe than the one before. To keep the breakout intact, let's observe whether the current market showed a similar trace. But I do like to point out that the current PE is about 25 to 26, significantly higher than that of 2012, where it was only 14 to 15. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate bullish and bearish signals, especially when the red line and the green line cross over and showing divergence. Let's go over the legends. The blue line is the daily close of Dow Jones. The red dashed line is the money, represent the money flowing into the Dow Jones. The green line represent the money flowing out of Dow Jones. The orange solid line and the dashed line are the support lines for the green line and the red line. The bright red and the purple line reflect traffic light S&P 500 in 2008 major correction event. The bright red line represents the time when the traffic light S&P 500 crossed above the red line, and the purple line represents when the traffic light S&P 500 crossed below the purple line. Before traffic light S&P 500 crossed above the red line, traffic light Dow already showing bearish crossover, where the green line crossed above the red line at least twice. After traffic light S&P 500 crossed below the purple line shown here, and it is confirmed by traffic light Dow, there's a bullish crossover where the red line crosses above the green line. Here are some bearish and bullish views in a zoom-in traffic light Dow Jones. Potentially there could be a bearish divergence setup, but this bearish divergence is not materialistic yet because the green line continues to stay low. On the bullish side, the red line is ascending, and the green line continues to stay low. I would cautiously say intermediate bullish trades continues and pullbacks are expected. We can see the similar things in traffic light NASDAQ. As you can see, traffic light NASDAQ red line made a new high recently. The red line was near resistant and reached the highest level recorded in the last 11 years. In April 2010, the index retrieved from this type of situation with a significant pullback. In May 2013, there was a smaller pullback. I will zoom in the mentioned period in the next slide. In both situations, the index started to descend when the red line started to flat out. The bullish trend restarted after the cap on S&P 500 occurred, or the red line start to ascend again, as shown here. It's either the red line start to ascend at the support 2 or support 1. In 2010 period, this period right here, there was a cap on S&P 500 occurred. There was 1 day 2, 1 day 18, and 1 day 4. If you desire to know more about the S&P 500 capital appreciation point, you have the privilege to access Starter A servers for free during the trial period. Here are some bullish and bearish observations on traffic light NASDAQ composites. On the bullish side, the red line made a new high, while the index made a new high. Second, since the red line continued to ascend, but recently start to descend again at the resistance level. On the bearish side, the green line is finding support at the orange dashed line, so it could be a pullback. Here's the summary for February 24th, 2017. Traffic light S&P 500 is in green and shows more long-term bullish sign. Traffic light Dow and NASDAQ shows some intermediate bullish sign. Traffic light Dow and NASDAQ shows mixed signals and could indicate a consolidation. Traffic light NASDAQ, money in, the red line, is near a resistance level. Short-term gain could be limited. Thank you for listening. If you have any questions, please do email me.